Hello everybody and welcome back. This is Swati Gupta, Chartered Accountant. Today in this lecture we will cover a very important topic, that is joint arrangement. What is joint control, what is joint operation, how it is recorded in the books of account, and also we will discuss about decommissioning liability and its recording in the books of account. Okay. So for simplifying, we'll take a case study. Before we move ahead with a case study, don't forget to like, share and subscribe. Let's begin. Here is a case study. Neelachal Gas Refinery Limited, herein referred to as Neelachal, a listed company, is involved in the production and trading of natural gas and oil. Neelachal jointly owns, okay, this means as per Ind AS 111 or IFRS 11, okay. It is a joint control. It is a joint control on arrangements okay, an underground facility, storage facility with another entity. Simplified Refineries Limited, herein referred to as Simplified, both the companies are engaged in extraction of gas from offshore gas fields which they own and operate independently of each other. Okay, they all have their own refineries and gas factories separately. Okay, they are not sharing, they are only sharing the storage facility. Okay, so there is a joint control for storage facility. Okay. Both here, Neelachal owns 60% of the underground facility, whereas Simplified owns 40%. Okay, they have a sharing ratio. Both the companies have agreed to share services and cost accordingly, with decisions relating to storage facility requiring unanimous agreements of the parties. The underground facility is pressurized so that the gas is pushed out when extracted. Okay, so it's a facility wherein more gas is injected, okay, in order to remove that gas and make it a flow further. Okay, more gas is injected, okay, which helps in flow further of the gas. Okay, see, the underground facility is pressurized, is injected with more gas so that the gas is pushed out when extracted. When the gas pressure is reduced to a certain level, the remaining gas is irrecoverable. This means whenever the pressure from one end is stopped, it is not flowing further, and therefore a certain amount of gas gets stored and stuck in the storage facility, and which is irrecoverable. That means you cannot extract it unless and until it is decommissioned. This means unless and until the storage facility is removed, dismantled, or you can say decommissioned. As per the law in force, the storage facility should be decommissioned at the end of its useful life. What is decommissioning? Removal at the end of the useful life. Neelachal, that means at the rate 60% who has a shareholding, okay, a share or ownership control over this storage facility, is asking for the advice, treatment, how it's need to be done in the books of accounts, and also needs accounting consultancy for the irrecoverable gas. Okay, let's begin. Now firstly, it says that whenever you have to check whether there is separate vehicle or not, separate vehicle created, okay, this means either yes or no. When you are making a joint control, okay, you have to check whether a separate vehicle is created or not, separate company is created or not. Okay, so here they are having joint control, okay, on the arrangement on the storage facility, but they have their independent factories and all, and they have not created any other organization, any other company. Okay, so if they create a new vehicle, then it is known as joint venture. If they are not creating any separate vehicle, okay, then it will be considered as joint operation. Okay, so here in the given case, here they are not creating any separate vehicle, and therefore here it is joint operation. It is joint operation. Okay, and therefore Neelanchal should record this storage facility, okay, storage facility as property, plant and equipment at the rate 60%. Okay, 60% of the storage facility will be recorded as an asset under PPE in the books of Neelanchal. Good. Now we will talk about irrecoverable gas. Now, as per Ind AS 16 and Ind AS 37, okay, it says that whenever there is decommissioning liability, okay, two things need to be done. Firstly, its present valuation needs to be calculated. Secondly, it needs to be added to the cost of the PPE in the amount of the PPE. Okay, so here what you will be doing, you will be recording this PPE and you will be creating a provision for decommissioning liability. Okay, and you have to do present valuation, because here time value is important because it's a future liability, but you have to make a record of this because as per the law it is compulsory. Are you clear? Good. Now what happens is, here an important concept comes is that here Neelanchal and Simhanchal, since there is a joint operation, they are jointly and severally liable under joint operation. Are you clear? This means that if Simhanchal ends up telling no, I cannot bear this cost, or does not take any action for this decommissioning, but as per the law it needs to be done, it is required to be done. Okay, so in case if Simhanchal backs out, Neelanchal has to make this particular expense, that is decommissioning expense. Are you clear? So because of this, the important thing comes is that Neelanchal company has to record 60% and 40%. Okay, for 60% of the decommissioning liability, it will create a provision for decommissioning liability. Whereas for the rest of the 40%, which is Simhanchal's responsibility, but in case if it backs out, then Neelanchal have to take this particular decommissioning liability expense, and therefore it has to be recorded as contingent liability. Okay, so you have to calculate decommissioning liability, calculates its present value, record 60% of this decommissioning liability as provision, okay, and 40% of this liability as contingent liability in disclosure. Okay. Now, if we talk about the irrecoverable gas and the flowing gas for which it's asking the treatment, okay, irrecoverable gas and all. So this is the stuck gas. This is stuck in the storage facility. Okay, it is stuck gas. Okay, which will be extracted only at decommissioning, extracted at end of useful life or at the time of decommissioning. Okay, are you clear? So this is added in the PPE. Okay, this is added in the PPE. The amount is added of the irrecoverable gas in the cost of PPE. Okay. Whereas if we talk about flowing gas, which is injected, which is pressurized, which is regularly flowing, okay, this is treated as inventory, okay, as per IAS 2, or you can say in AS 2. I hope this case study helps you and clears a lot about joint arrangement, joint control, joint operations, how it is recorded in the books of account. Okay, in case of any doubt, please reach out to us, comment down below, or check out description box for full videos and full courses. This is Swati Gupta. See you in the next videos. Till then, take care, be safe, stay tuned, and don't forget to like, share and subscribe and leave a comment.